After 5 weeks of being down, we finally saw a strong week last week. I'm Adam Anderson, owner and founder of WealthGuard Advisors.
Hello, I'm Blake Anderson. Thanks so much for joining us.
We're excited to get into what's been going on in the market. Last week, we gave a report on last Monday when the market was down. And the next day, we saw good news from the Trump administration about progress with the war in Iran. Even though it was kind of speculative still, the market rallied significantly, over 2% on the S&P 500. I think it was over 3% on the NASDAQ. Just a big day. We actually saw a follow through the next day. And then on Thursday, it's Monday, Tuesday, Wednesday, Thursday. Friday was closed. Oh, that's today. And then on Friday, we thought it was going to be a down day. It was going to give it all up. And then through the day, the market actually rallied up over 1.5%. So this just gives us an example of once the news cycle changes, how much the coiled spring is there that could really propel the market.
Yeah, I think there's definitely a lot of buying potential out there. There's a lot of people who are just waiting for, some signal that the market's turned around. And we should expect to see more rapid good days, strong good days in the market as soon as we get some more clarity, some more positive news with the situation in the Middle East, or even just some sort of a ceasefire that allows oil to flow, not necessarily a total resolution. So that's something we should definitely be watchful for. It doesn't mean we won't see down days in the meantime. We could have, hostilities kick up again and we get a couple down days before some sort of resolution. But I think this whole situation kind of reminded me of a report I read a couple years ago by JP Morgan, where we looked at the return of the market over the last 20 years if you took out the 10 best days. And it basically halved the return of the portfolio if you took out the 10 best days, just investing in the S&P 500 over 20 years. And obviously it changes a little bit versus when you pick your start and end dates. But it is a good point. And one of the important takeaways there was that 7 of those 10 best days come in bear markets. And often they come immediately after one of the worst days. So that's something to look out for. Yeah, we might have a bad day, but that doesn't mean, the following day couldn't be very strong.
So we've been talking a lot over the last few weeks about, hey, once the news cycle changes, things are going to be different. And I just want to kind of iterate that we've seen great earnings from companies. We actually see good fundamentals. I mean, the only thing that's really holding this market back is the Iran situation, and the price of oil as a potential inflationary indicator. But let's talk about this is the key indicators that just came out this week. So job openings, their expectation, actual 6 million. U.S. retail sales, its actually expectation was 0.5. It came in at 0.6. So retail sales is actually strengthening. The ADP jobs indication, they actually expected 39,000. It came in at 62,000. ISM manufacturing actually upticked about 0.6. U.S. trade deficit actually decreased. U.S. employment report actually increased significantly, like over 100,000 jobs, and U.S. unemployment rate actually fell by 1/10. So every one of these parameters are coming in better than expected. So this is really a good catalyst for the market once we get this cloud of Iran or oil off of the horizon. So really a lot of good stuff there. So it is a buyer's market. The things are cheap, and now is the time to be really looking at. Here are some great numbers on some of the tech companies. The multiples that we're seeing are very low. Just if you're sitting on the sidelines and you're waiting for that time to get back in the market, obviously, to Blake's point, long-term investing is the best. Invest for your time frame, not for this next little turn cycle thing, but really to be invested for the long haul, and high quality companies, good solid strategies is always the best thing to be doing.
It is good that we're seeing the economic data back up our estimation that this might be open, and it justifies the buying pressure that we see out there on these few updates that we do see when we have that strong economic backing to them. Definitely something to look out for. Maybe you think, hey, it's still too early for me. I turn on the news at night and it's still bombs and scare and all that. So maybe what are some sectors we could be buying in this market? One fun option that I was looking at last week is the space industry. Big
Hence
news
my
is
background. We got the Artemis 2 background here to highlight this segment that Blake's going to enter into here.
Yes, yes. Artemis 2 was very impressive to watch that launch if you didn't get to see it. But another big market news is the SpaceX IPO. We saw that they started filing paperwork for that, so we should expect to see more news here in the next few weeks, more definitive timeline coming forward, but should expect to see that IPO here in the next few months, couple months. Um, and generally, when we see a very publicized, very popular IPO like this, the entire sector tends to be sort of caught up in the wave of optimism. And so one thing I've looked at is ticker UFO,
All
which is
right.
a space themed ETF. I will say thematic ETFs tend to not do very well in the long term, so something to keep an eye on. But in the near term, I do think space is a good sector. I think there's a lot of potential in monetizing and capitalizing our space resources, and something to keep an eye on.
So looking at it from a technical aspect, it's been in a base here really since the beginning of the year, going sideways. It had a little dip here. It came out of this actually on high volume, which is a good indication as a breakout. Now we have owned, and many of our clients have owned Rocket Labs for quite a few years. Let's just look at that real quick. And it has been a major, there it is, Rocket Labs. Although it's kind of down right now, but let's look at this on a long-term chart. Really going back from like the mid 2023 to its high. That's a 17, almost 1800% increase. So no joke here. This is significant. Now we have had a nice little pullback of about 35%, but it could be a nice reset into a new upward cycle because they're doing a lot of cargo into space. And with the success of the Artemis 2 generating more interest in space exploration, these companies could be really good. But I did want to talk about the SpaceX IPO because, of course, it's going to have a lot of buzz as it gets closer, and people are going to be interested in participating in that. So, unless you are an accredited investor and have access to pre-IPO shares, which most of us don't, there's really very limited options, but there are options. So there are funds out there that do invest in pre-IPO. Now, sometimes they have some limitations upon withdrawal because they're not liquid assets. But there are avenues, if you're not an accredited investor that happens to have access to a SpaceX IPO, that if you wanted to talk to us about, we could talk to you about, and help you get some exposure to the actual SpaceX IPO, which once it IPOs will probably be a part of that fund, that like just the UFO fund that we just talked about. So last week we talked about, if you're concerned, you're sitting on the sidelines and you want to have something secure, we talked about some dividend paying funds. And there's one I really am interested in, and it's the company's called Americold. And this is a real estate investment trust that stores frozen foods and stuff. It's part of the food supply chain of our nation. So it's not your traditional real estate investment trust. It's offices and tilt ups and, that kind of things. This is companies that have gigantic freezers. So even though it's down, it seems to be collecting into a nice little base here. And the dividend is about 7%. And they just raised the dividend about 5% the quarter before last. Where is that? Anyways, last year from 22 cents to 23 cents. So it did increase the dividend recently. So as far as a dividend play, you know, 7% range, maybe a little higher. Seems to be very stable. They don't raise dividends if they're not sustainable. It's being paid through cash flow, not through like their debt. So it's a pretty good opportunity.
I think it's a very different company. We don't often bring up real estate investment trusts, but there is a lot of potential there for, a dividend play where you're looking for something a little more stable. So there are opportunities out there. And we love talking to people. If that's something that fits your risk profile, fits your financial goals, we love talking to you about that. So if that's something you're interested or space, investments is something you're interested in, or just want to catch up with us about how we're handling the ups and downs with the volatility of the market, we'd love to sit down and talk with you. Remember, here at WealthGuard Advisors, we are a registered investment advisory firm, and part of that is a fiduciary responsibility to our clients, where we're obligated to act in your best interest. So we're open to free initial consultations, and we'd love to sit down and chat with you. Our contact info is in the description below. Thanks so much for listening. We'll see you next time.
Hey, we'd sure love it if you followed us, liked us, shared us. We could use all the viewers that are out there. This is really for our clients so that they know what we're doing, kind of give you an idea what we're thinking about. But of course, if you're just happen to stumble upon us, we'd love to talk to you also, and maybe we could be of help to you. Thanks again for listening.